or sell the France stock market ETF. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So you can find France here in Middle Europe at 25% from the 52-week low and 18% away from the highs. Here is the France stock market ETF chart. The ETF in question is the EWQ. So one of the interesting things about the French stock market is that we do see these major time cycles that's been relatively tradable for some time. Let's move it a bit like that. So we are part of a major declining phase that is supposed to extend into early 2024. We have seen these time cycles be a pretty big deal in the past year for France. So it's definitively something to have on our radar. If we look here at previous major cycles, they usually have two smaller within. You can see this here, like 1 and 2, 1 and 2, 1 and 2, 1. And it could be that the recent rally is part of this rising phase within the major time cycle, and then you have a declining phase also of that smaller time cycle. So basically, there's reason to expect that there is a declining phase around the corner, combining a small and a major time cycle. If we zoom in a bit here, we can see that the latest two candlesticks here on the weeklies are bearish. Especially this week, we went up way higher and then we closed significantly lower. We have seen that previous reversals here, like back here and here and here. Basically, it's very common for France to have these pullbacks and they can quickly become self-reinforcing. Going here to the daily data points, you can see that the major daily candlestick reversal here was on the 13th of December. Confirmed on the 14th, and yeah, there is definitively some pullback in development here. Let's look here at these other indicators. So weekly RSI and 20-week PPO here in purple is stretched. Not extreme overbought, but on the higher end of the spectrum. When we go here to the daily data points, so let's look a bit further back. You can see that RSI recently got pretty high. So when we have these kinds of RSIs, it's very common for us to explore the lower end of RSI, getting even into oversold territory. That's the dynamic here for our RSI, and you also see that reflected in the PPOs and also here at the MACD. When you have these crossovers like you had back here, you usually see a repricing of this ETF. So in my notes, I write time cycles, bearish, and we are overbought, especially here on the dailies, like that. -4 here on the technicals in favor of the bears. Then we look at the seasonality. So the seasonality tool here to the left in green shows the last 5 years, 7 years in blue, and the last 10 years in red. We do see that there can be some more strength into the end of the year, but then it's pretty weak here throughout January. Looking here to the right, we can see the actual numbers for every single year, and you can see that going back here to 2011, December has been potentially rather bearish month, but recently it's been a bit bullish. When we look here at the January, we can see that it's been more bearish than bullish, but the years like 2018 and 2019, when it was bullish, it can actually be rather bullish. But then you see here that February is a relatively weak month, at least since 2016. So there's issues when it comes to the coming seasonality for France. So on the seasonality, I will give 4 points to the bears. Now let's look at the fundamentals. The natural thing to compare France with is America. Let's go here to performance year to date, minus 12% for France, minus 17 for America. So it has been outperforming America, but a 12% loss is still, significant for a major stock market ETF. Beta is identical. The PE is 27.5 for France and 21.7 for America. So America is cheaper, but 21.7 PE is it's definitely not cheap. The yield is 1.50% for France, 1.22% for America. Also, there's yield, but this is not the type of yield that will offset these kinds of losses. Here you can see the sector breakdown. Consumer non-durables is pretty big in France. And here you can see the breakdown for America. So when it comes to the fundamentals, is there like a good fundamental reason to pick the France ETF over the American ETF? Not really. The issue with the France ETF is that the P is significantly higher, and you also get more exposure to sectors that are more discretionary, which is not really ideal. But I will not be like strongly bearish, but -1 here on the fundamentals. Let's look at relative performance. When we long-term compare France with America, the correlation is at 89%, so that's pretty strong. The correlation with VGK, which is the Europe ETF, is 98%, so almost perfect. And there is a -44% negative correlation with the dollar index. Looking at the daily data points, shorter term, 74% with America, 96% with VGK, and -82% with the dollar index. So what happens with the VGK is going to have a significant effect on the France ETF. Here you can see the VGK. Pretty clear that we have time cycles in this ETF as well. In this instance, we can see something that is rather problematic here for the bulls, and that is a very solid surgical rejection from the 200-week moving average. Very tradable moving average. So yeah, definitively some bearish developments here. Looking at the daily data points, we have paradoxically been able to break out above the 200 daily moving average. If we were to be able to stop the sell-off there and use it as support, it is interesting in the sense that you have the green 50 daily moving average sharply moving upwards. So if you get a golden cross and support at the 200 a day, then technically speaking, that is good on the dailies. And on the weeklies, it could mean that we might be able to get through the resistance at the 200 weekly moving average, but that is obviously to be determined. The current setup here is that the latest nice move here, the big move, is from the bears. The rejection from the 200 week was very significant and clear. Not in disaster territory for the bulls here on RSI or the PPOs, but it's on the higher end of the spectrum. But on the dailies, we do see that a recent rejection came from very high levels here on RSI and also the PPOs. The purple 20 daily PPO here, it was actually very significant. Okay, so let's now compare France with the VGK. Like that, and do it like that. So EWQ, which is France, and then we did get VGK like that. So recently, France has outperformed the broader European stock market ETF, but we got overbought here on the weeklies. On the RSI, you can see that we are rejected from the same level we were back here. In this instance, we went a bit higher, and then we pulled back. So quite a few times getting overbought on the weeklies is a trigger for a rotation out of France and into the European stock market ETF. If you look a bit here at the seasonality for these two, you can see that France has a bit of a tendency here to the left to outperform into early January. When we look here to the right, you can see that December, it's quite clearly a month where France underperforms VGK. So December is definitively bearish. Looking at January, a lot more red than green. So January is also a month where France has a strong tendency to underperform VGK. So in this instance, I do think I will give a solid -7 to the bears on relative performance. We end up with -4.5 here for the bears. The time cycles are bearish, but they are a bit bigger picture. On the dailies, we recently got overbought. Previously, it's been a trigger for more significant pullbacks. So the current setup for France is bearish. Okay, so we do have some time left. Let's look at some of these stocks within the France stock market ETF. The first is LVMH, Monet, Hennessy, Louis Vuitton. You do have the over-the-counter. So let's look at this one because we have more data. But you can see that there is an over-the-counter alternative. Yeah, so in this case, you see that Louis Vuitton has really tried to break out. So that's interesting. So let's look a bit at RSI and PPO to see whether it's possible to break out. Yeah, on RSI on the weeklies and the PPOs and the MACD, we aren't really in like super high risk territory. So we're not super, like it is possible still for the bulls to pull it off. On the dailies, accumulation and distribution is very bullish. But we were recently overbought here on RSI and the PPOs. And we are seeing that there is a pullback in development. Yeah, let's look here at the seasonality. Yeah, usually a bit weak into mid-January to the left, to the right. Even though December so far has led to a -6% loss. Recently, it's been a strong month. But the Louis Vuitton, it's very discretionary spending. You don't need to get a Louis Vuitton bag. So I think that we could say that in the current economic climate in Europe, yeah, it's risky for Louis Vuitton. Here you can see some fundamentals. Looking at price book, we are historically, a bit high, as you can see at price to sales. We were way higher back here, but we're definitively not historically at lows. Price earnings also elevated. Let's have a bit of a look here at some of the other fundamentals. So there is a 1.73% yield. I mean, that it's a bit of a yield. Okay, so you have 30 analysts with a 1-year price target for Louis Vuitton. Well, the correct name is LVMH because there's been mergers. 13.55% higher is the average price target, so that is a bit bullish. Minimum is 10% below us, highest is 31% above us. That actually is somewhat bullish, but as we saw, when we do, what I like is to really compare a security against itself. And when you look at where price book, price to sales, PEs, we see that we are high for this stock. So let's do a bit of a quick total energies. That one is also listed on the NYSE. So in this case, on the weeklies, you can see that there definitively are some time cycles here for total. Let's see how surgical they are. Yeah, I mean, you have also these very small time cycles here, frankly, like that. Very small time cycles, but recently they have been rather, well, relatively reliable. Let's quickly look here. Okay, so the seasonality here to the right is pretty bearish for December. January is very mixed. Looking at the average here to the left, it's just a waterfall into late January. Looking at price earnings, price book, price to sales. So due to the recent, super demand for natural resources, the situation here is not like super overbought. Well, overvalued is the correct term. 4.44% yield. There's 24 analysts covering this stock with a 1-year price target. Average price target is 15% above us. Lowest is 11% below us. Highest is 54-ish% above us. So yeah, so we have seen a pretty strong rally here for Total. So you're not getting in at the lows. The time cycles here certainly suggest, and the recent history suggests, that when this one pulls back, it can really pull back a bit. So yeah, we have looked at France, the EWK ETF. We looked at the two the biggest components of the ETF. And if these two major components will have a bit of a pullback, then that can definitively affect the ETF. Whatever you do, of course, you want to use stops and have a good exit plan whenever you put on a trade.